This report is about how good management of financial technology and insurance planning helps maintaining a good life. People should start early to pay attention on their daily withdrawals to prevent bankruptcy or shortage of money. Create a financial planning is a wise choice where it helps a lot of people, but there are still plenty of them did not aware about the good deeds of financial strategy that could help and leave a good impact in life. In the beginning, we elaborate the definition and purpose of financial technology and insurance planning that could leave a variety of good impacts for those who will or already apply it in their daily life. The current issue also has been discussed with title as insurance implication during COVID-19 pandemic and limitation and risk to consumer of using information and communication technology. Both issues explain that each aspect has their own pros and cons, where we are here responsible to decide which is the wise decision to make to secure our generation's future.
Insurance is a tool for risk management. In exchange for payment of a predetermined premium, a corporation all across the state enters into an agreement to guarantee reimbursement for a specified loss, damage, illness, or death. People purchase protection against unforeseen financial losses when they purchase insurance. If any horrible thing happens, the insurance company pays them or a person of their choice. They can be liable for all associated causes if they don't have insurance and accident occurs. Any healthy financial plan must include insurance. After experiencing a financial crisis, being prepared for the unexpected can ensure that you can still achieve your goals. Additionally, having insurance will prevent you from depleting your emergency fund. Insurance can also safeguard your loved one from unexpected event. Without coverage, some scenarios can be quite expensive, so it's crucial to buy whatever policy you require based on your financial situation. Any technology that provides financial services through software such as online banking, mobile payment apps, or even cryptocurrency is referred to as financial technology or fintech. While there are many distinct technologies included in the broad category of fintech, its main goals are to alter how consumers and businesses access their funds and to compete with established financial services. As more services move to a new technology paradigm such as using a payment app on a mobile wallet instead of carrying a real credit card in a physical wallet, fintech solutions are today threatening the existing financial infrastructure. Insurance can cover the cost of potentially expensive incidents so that consumers are not required to. Because insurance will offer financial security for people and their families if anything unpleasant happens, it is essential for us to be able to concentrate on the important things in life. For example, insurance policies can help to offset the family's financial loss caused by the untimely demise of the family's primary source of income. The family can also pay off any bills that the injured individual may have racked up over the course of his or her lifetime. Fintech advancements have the ability to provide a variety of advantages, specifically cost savings, enhanced risk assessment, higher customer experience, and increased financial inclusion. Fintech offers new money management services that enhance startup financial planning, promote better business growth, and lower failure rates. For instance, the term financial inclusion enhanced refers to the extent to which financial services are made available to those who may not have previously used them.
My name is Noaina Satwani and I will continue the presentation with the importance of insurance planning. The first point is financial security. It is important because no matter how much you make or how much you save, an unforeseen incident may devastate your financial situation in instant. As a result, the greatest approach to become financially secure is to insure yourself, your family, and your valuables. Besides that, you may buy or renew insurance online and receive a payout for financial assistance in the event of an unforeseen accident. There are many people who regret not planning insurance from the beginning. The second one is insurance planning can help to reduce stress during difficult times. As we can see, no matter how hard you strive to make your life better, an anticipate tragedy may entirely turn everything upside down, leaving you physically, emotionally, and financially exhausted. To be honest, having appropriate insurance helps in the sense that you don't have to stress about money during such a difficult period and can instead focus on recovery. For example, assume you need a quick hospitalization, then in this scenario, having health insurance saves you the worry and stress of organizing money. With insurance in place, any financial worry will be alleviated, allowing you to concentrate on your recovery. The third one is encourage savings. Life insurance policies encourage systematic savings by transferring cash in the form of premium each year. At the end of the insurance term, the policyholder can reap the benefits by receiving a lump sum payout, which will result in a large wealth corpus. Furthermore, insurance promotes savings by lowering your long-term expenditures. Then, you can avoid paying out of pocket for bad situations such as medical bills, bike theft, accidents, and more. It is also an excellent tax saving strategy that may assist you in lowering your tax burden. The next one is peace of mind, which means that live a peaceful life and manage your risks that you can face in everyday life. In other words, you must protect your life insurance and live stress-free. In fact, we work extremely hard for our families. Thus, life insurance and term insurance policies are critical for securing your family future in your absence. Then, when you handle the uncertainties of life with insurance, you will have total peace of mind. For the last one, we will see from the different side which is important of insurance planning and economy. Provide safety to individual and business. Moreover, insurance provides financial support and reduce uncertainties that individuals and business face at every step of their life cycle. It provides an ideal risk mitigation mechanism against events that can potentially cause financial distress to individual and business. For instance, with medical inflation growing at 15% per annum, even simple medical procedures cost enough to disrupt a family's well-calculated budget. In case of business insurance, financial compensation is provided against financial loss due to fire, theft, mishap related to marine activities, other accidents, and many more.
Years of 2020 and 2021, many social activities and other activities had to be held for a while to control the spread of the disease of COVID-19. First is general insurance. The industry has made effort to assist affected people in dealing with the virus' immediate health effect as well as the subsequent economic consequences, with PIAM stating at PIAM, LIAM, and MTA have pledged at 8 million contribution to establish a special fund for COVID-19 testing for medical insurance policyholders and medical takaful certificate holders. Next is life insurance. Bank Negara Malaysia (BNM) has announced additional measure to assist SME and individuals, including a 3-month delay in payment of life insurance premiums and family takaful contribution without affecting policy coverage. In addition, life insurer and family takaful operator will provide the following assistance to COVID-19 affected policyholder and takaful participant until December 31, 2020.
The 8 million ringgit fund from the insurance and takaful sector is the Ministry of Health's initiative to carry out more COVID-19 tests on Malaysians. PIAM and MTA have given 2 million ringgit and 1 million ringgit respectively, while Liam is leading the drive with a 5 million commitment. Through this program, the insurance and takaful industry hope to support roughly 27,000 more COVID-19 tests on eligible individuals and help the government achieve its goal of boosting population testing. As a result of their persistent commitment and frequently significant personal sacrifices in the fight against COVID-19, Liam, PIAM and MTA pay tribute to all healthcare frontliners. They are the unsung hero, and in these extraordinary times of turmoil, all Malaysians can find encouragement in their unwavering work and dedication. In order to assist break in the chain of COVID-19 infection, the industry also expressed appreciation to all Malaysians who had shown solidarity by carefully adhering to the MCO.
The first importance of fintech is cost-effective. Businesses that use fintech services can avoid charging any unneeded fees such as cancellation fees or other hidden expenses. Next is compliance and security. Because the principles of fintech include the effective use of technology, compliance and security will be less of an issue. Next, transparent. Aside from just giving or receiving money, everyone is kept in a tight loop with complete transparency. It is a win-win situation for both the banking sector and its valued customers. Fintech is also very convenient. Fintech businesses have improved transaction efficiency and convenience by making extensive use of mobile networks. This implies that clients have a better experience, there is more openness, and information is more easily accessible to the general public. Putting this information in the hands of customers leads to improved public services. Lastly, fintech innovations have enabled online or digital lenders to complete the application and approval procedure in a single day.
Like the rest of the globe, it has been swiftly ushered into the digital era during the last several decades as a result of the exponential and unprecedented rise in the use of information and communications technology. I'm Ratan Johari and I will present to you about the risk to consumers as a current issue of financial technology. According to KPMG International 2019, there is a lack of customer awareness of fintech design and function. Data privacy, confidentiality, and protection are vital for customers, and when they use a fintech service, they are forced to disclose their personal information to the fintech provider. Consumers are at danger of losing their data and may be uninformed of how their data is being used. Most of the incidents, according to the Movement Control Order (MCO), were theft, infiltration, and online harassment. Scams, phishing, and social networking strategies are further instances of online fraud cases and involve deception to get personal information from victims. According to the UN Making 2020, intrusion is defined as attempted hacking or data breach, whilst cyber harassment is defined as cyber stalking.
The report claims that although Malaysia has been moving toward a digital economy for the previous 10 years, the epidemic has sped up the adoption of digital banking. In 2020, mobile banking transactions total RM460 million, a 125% increase from the previous year. Online banking penetration was at 112.5% and 61.8% respectively. Malaysia's overall gross domestic product fell by 5.6% in 2020 as a result of the pandemic's border restriction and worldwide movement restraint order. The labour market's activities had been impacted by the movement control order's implementation. The digital economy has, however, expanded more quickly since COVID-19. The contribution of the digital economy to GDP increased from 19.1% or RM289 billion in 2019 to 20% in 2020. With backing from the government and authorities, the nation's economy, which is becoming more technological, has contributed to the growth of startup and the attraction of investors. The increase in e-wallet usage was an unavoidable tendency as Malaysians continue to adapt their daily routines to match the new normal during the pandemic.
The application of financial technology and insurance planning is very helpful in organizing the direction of life better and systematically. This is because in this modern era, money management is very important because everything requires money. If you misuse money, then there will be financial problems that are becoming the biggest problem for everyone. Thus, when compared to the pandemic era where companies started to collapse, the economy, job losses and so on became stark that money management is very important because it is also related to the country's economic growth. Last but not least, it is hoped that the current study would help in the creation of improved public laws and regulation pertaining to the financial industry, specifically the financial technology and insurance financial sector. The case studies, research and conclusion reached here are also intended to aid policymakers, business owners, academics and other professionals in better understanding the financial technology and insurance planning.
Then, now I will explain the recommendation for insurance plan. Based on the pandemic situation right now, I will suggest getting a pure protection and saving plan. A protection and saving plan, especially one that is non-participatory and non-linked, is a safe and risk-free option. An insurance plan that also offers saving helps you plan your life goals without worrying about unexpected liabilities come your way. Your goals need not alter because you have a saving insurance plan in place. In difficult assumptions, such as the one the world is presently experiencing, people seek stability and minimal risk. Besides, a protection and saving plan that provides guaranteed income and benefits is essential during a pandemic, when employment and wages are unpredictable as a present cost. Some of the options that protection and saving plan that is non-linked and non-participatory include: the first one is guaranteed income. Picking a variant that offers the option means you get regular payout for a fixed term, which could be in the range of 10 until 12 years. This is useful if you have a loved one dependent on a fixed income for a specific period until they can be independent. The second one is long life income option. The guaranteed lifelong income option ensures that you get a guaranteed income until you touch 99 years. This is ideal if you have a family that is fully dependent on you or if you are the breadwinner. The next one is long-term income options. The variant ensures that you get a guaranteed income for a term that is fixed for 25 or 30 years. The last one is guaranteed maturity. The maturity option ensures that you get a lump sum payout of your benefits at the time of your policy's maturity. Then, the saving component ensures that you get a fixed income at uncertain times such as now when the world is facing a pandemic, so you can cope better.
Fintech or financial technology is increasing range have been implied covered in these online pages. As traditional fintech starts up, payments, investing, financial planning, and lending frequently come to mind, but new business models like RegTech, compliance, human resources, and marketing are growing. The relentless quest of creating revolutionary technology is crucial and important for driven and talented founders. That said, investing a lot of time and energy in other business essentials like company structure, privacy, and security is necessary for success in the financial services industry, because the regulatory and operational standards for third-party vendor assessment and supervision are so strict in comparison to those in most other industries. The financial services customer base provides unique hurdles for fintech businesses. Early mistakes made in product design and team formations could become problems later on when trying to sell the product. Starting to compete with the banks are fintech businesses. Other companies and entrepreneurs are already developing substitute software and services as a result of these fintech companies starting to really compete with banks. We have seen a lot of innovation in the banking system, particularly since 2009. Bank profits are being sought after by one group while they are being sought after by another group to prevent such losses. In the meantime, a sizable number of business people have introduced numerous alluring products onto the market in this regard. These have significant effects. For instance, the virtual currency known as Bitcoin has begun to materialize. According to numerous sources, each fintech for sustainability catalyst would fund a portfolio of innovative initiatives, each addressing a distinct problem. At least one organization with a commercial incentive and the capacity to implement the solution at scale would serve as the anchor for each round of innovation, which would each have the explicit goal of assisting in the creation of more funding for the achievement of at least one UN Unsustainable Development Goal (SDG). It will be crucial to take the time to develop on an industry-wide basis. Such catalysts would need to be situated so they could have physical access to as many multinational corporations, financial institutions, and startups as possible. They would also use tried and true innovation practices to provide professional governance, including of competitive boundaries and IP. Delivering solutions that are economically viable would be a sign of success, and the authority to organize the innovation process would need to go to an impartial party with appropriate knowledge in fintech, finance, and sustainable development.